the registration provisions once again. Okay, registration is compulsory, or when a person has to register under GST when they cross the threshold limit in a financial year. In a financial year, meaning in the current year. We should not see previous year's turnover. It should be in the current year. If you cross the threshold limit, you have to register under GST. Now, what is the threshold limit? Threshold limit is 40 lakhs are only goods. 20 lakhs when you are supplying both goods and services. There are certain states which has been regarded as special category states. For special category states, if you are supplying both goods and services, the threshold limit is 10 lakh. If you are supplying only goods, the threshold limit is 20 lakhs. Okay. Special category states with respect to goods is Arunachal Pradesh, Meghalaya, Pondicherry, Sikkim, Telangana and Uttarakhand. Special states with respect to providing both goods and services, the northeastern states. Then we have Arunachal Pradesh, Assam, Manipur, Meghalaya, Nagaland, Himachal Pradesh, Sikkim, Tripura, Uttarakhand and Jammu Kashmir. So it's majorly the northeastern states and other states like Himachal Pradesh, Jammu Kashmir. Okay, so this is the first part that you should be thorough about. 40 lakh, 20 lakh for general category, and for other special category it is 20 and 10. Now, aggregate turnover, what should be included in the aggregate turnover? We have to include all taxable supplies, exempt supplies, branch transfers, export. What should not be included? Interest on deposits and CGST, SGST, IGST, taxes. That should not be included when you are calculating the threshold limit of 20 lakhs and 40 lakhs. In case of a job worker, if any supply is made by the principal directly from the premise of the job worker, that should also not be included. So we have to include only the outward turnover, okay, of this particular person. Inward supply should not be included. Other parties' turnover should not be included. For the purpose of GST, Delhi and Pondicherry are considered as states. Even though they are union territories, they are considered as states for the purpose of GST. Just like special category states, there are certain special goods for which the lower threshold limit will apply. What is the lower threshold limit? 20 lakhs. 20 and 10. Now, what are those special category goods? Ice cream, pan masala, tobacco, fly ash, bricks of fossil meals, building bricks, and earthen roofing tiles. Okay, so for this category of goods, the lower threshold of 20 lakhs and 10 lakhs will only apply. Okay, this is with respect to registration threshold limits. What is aggregate turnover? What are the special category states? What are the special category goods? It's very important to remember this. Okay, I'll tell you one question that came in one of the previous attempts. It stated Mr. X is a supplier of ice cream products. He's a manufacturer, he's a supplier of ice cream products, and his turnover is 25 lakhs. Should he register under GST? So if we have not seen these special cases, like special exemptions to the general rule of 20 and 40, we will think, okay, he's a manufacturer of ice cream products. Ice cream is a goods turnover limit is only, if he is supplying only goods, the turnover limit should be 40 lakhs. So your answer will be, he need not register. But actually, for these ice cream and other special category products, the threshold limit is lower. It is 20 and 10 lakhs. So it's very important to understand what is the general clause and what are the exceptions to the general clause. and it is always, from your exam point of view, always the exceptions will only be tested. General clause, they will think that by default majority of the students must have studied. So let's see whether they know the exceptions to the general rule. So give more importance to exceptions. Wherever you see exceptions, you have to give importance to that. Persons not liable for registration. People who are not liable for registration, there are, first we will see two kind of persons. One is the person who is engaged only in providing exempt supply. So if Mr. X has a petrol pump, he is dealing only with the supply of petroleum products. He need not comply with the GST regulations because his product, his supply is completely outside the purview of GST. Then agriculturalist, for the cultivation or produce out of cultivation of land, they need not register irrespective of the threshold limit. Agriculturalist is an individual or HUF who use labor, either direct labor or their own labor or hired labor to do cultivation on land. For them also, registration is not required. Other than these two important parties, for whom registration is not required, that you have to learn with people for whom compulsory registration is required. Okay. So people to whom compulsory registration is required, first one, interstate supply. So a person who is dealing with interstate supply, registration is mandatory as per section 24. The exception to this is that for interstate supply of services or for interstate supply of handcraft goods up to 20 lakhs, you need not register. Okay, so for them also compulsory registration is not required. A person who is making an interstate supply, so the act says if you are making interstate supply, so if I am making an interstate supply of goods, I need to register irrespective of turnover. But if I am making an interstate supply of service, I need to register only when I cross the threshold limit of 20 lakhs. Okay. If I am making an interstate supply of handcraft goods, I need to register only if I cross 20 lakhs. Casual taxable person, non-resident taxable person, irrespective of turnover, they have to compulsorily register. What is the exemption to this clause? With respect to handcraft goods, you need to register only if you cross the threshold limit of 20 lakhs. Then a person who is required to deduct tax under section 51 or a person who is required to collect tax under section 52, they have to compulsory register themselves under GST irrespective of the turnover, because they are required to collect tax and deduct tax. So there is certain statutory provisions that they have to abide with. So irrespective of the turnover, they have to register themselves. A person, input service distributors also have to register themselves irrespective of the turnover, because they need to distribute the input tax credit. To distribute input tax credit, you need GST registration. Okay, so these are the exceptions from compulsory, certain compulsory registrations and exceptions to compulsory registration. And there are two parties for whom registration is not required irrespective of the turnover, that is person who are dealing exclusively in exempt supply, and agriculturalist for the produce on cultivation of land. Okay. Next we come to procedure for registration. Procedure for registration, you have to apply for registration within 30 days from the date you are liable to register. When are you liable to register? When you cross the threshold limit. So as soon as you cross the threshold limit, within 30 days, you have to apply for registration. In GSTR 01, the form name is GSTR GSTREG 01. You will get an acknowledgement in GSTREG 02. The registration certificate will be issued in GSTREG 06. If you are applying for registration within 30 days, then the date of grant of registration will be in your registration certificate. It will be the date you were liable to register yourself. So if I am crossing the threshold limit on 1st October and I have applied on 10th October, my registration certificate will be from 1st October, the date when I cross the threshold limit. If I don't apply within 30 days, I cross the threshold limit on 1st October and I have applied only on 1st December, and the registration was granted to me on 31st December, then the date or in the registration certificate will be the date of grant of registration, that is 31st December. It will not be 1st October. Okay. The disadvantage of getting a later registration is that we will not be able to take input tax credit for the period from 1st October to 31st December. So the tax will have to be paid out of his own. The supplier has to pay the tax out of his own pocket because he will not be allowed to take credit nor collect tax during this period, but he is liable to pay the tax. So that is the disadvantage of taking a registration at a later date. And if you are providing any supply from territorial water to the nearest base point, whichever is the state or union territory nearest to that territorial waters, there we need to take a registration. Okay. Then bank account details has to be furnished within 30 days. Then for casual taxable persons, we need to apply for registration 5 days before commencement of business. Okay, and it will be valid for a maximum of 90 days. Maximum of 90 days, meaning if the exhibition is for 5 days, it will be valid for 5 days. It will be the earlier of these 2 days. Okay, to a maximum of 90 days we can apply. So in one stretch you can apply for a maximum of 90 days. Post that, you are allowed one extension of 90 days. You can take one more extension. So total 90 plus 90. Beyond that, if the casual taxable person is providing the service, then they have to, or providing the supply, they need to register themselves as a normal taxable person. And the non-resident taxable person, casual taxable person, both of them should make a pre-deposit of the approximate tax liability at the time of application. Okay, that is the important provisions with respect to casual taxable person. Next, we have cancellation of registration. Cancellation of registration, the proper officer can cancel the registration if there is any default in payment of tax, or if there is a default in filing of returns, or if there is any fraudulent activity conducted, if they believe that the business is being fraudulently managed, then they can cancel the registration. Before cancellation, first step is suspension of registration. First, the registration will be suspended, a show cause notice will be issued, and the supplier will be asked to reply to the show cause notice as to why their registration should not be suspended. If there is no reply or an inappropriate reply, then the proper officer will go ahead and cancel the registration. Okay. That is the procedure. Procedure for cancellation is not very important at inter level. You can just have an overall idea of what is the procedure for cancellation of registration and revocation of cancellation. Okay. Is it clear? Now shall we go to the next topic? Any questions? Next we go to e-way bill and e-invoice, what are the different type of returns. So these are just chapters where you can expect maybe NCQs. I have not seen 6 mark, 7 mark questions, detailed questions from e-way bill and the other aspects. Returns, yes, once we have got a question on what are the components of GSTR1, but only to the base level. We have not seen any case studies coming up from these sections. So what is the last date for issue of invoice in case of goods? So these are more procedural. E-way bill, e-invoicing, returns, these chapters are more procedural. Where supply involves movement of goods, invoice has to be issued at the time of removal of goods. Where supply does not involve movement of goods, at the time of delivery of goods. So it is associated with our time of supply concept. Based on the time of supply concept, at the time of removal of goods or at the time of delivery of goods, the invoice has to be issued. If goods are sent on approval basis, the invoice should be issued within 6 months from the date of removal. In case of continuous supply, whenever a statement of account is being produced, at that time invoice has to be issued. This is very much in line with the time of supply concept. Last date for issue of invoices in case of services, general cases, within 30 days from the date of completion of service, the invoice has to be issued. When there is a continuous supply, then at regular intervals of time, as per the contract, we need to issue invoice. Okay, it can be in case of it is linked if the service is linked to completion of an event on or before the date of completion of event, we can issue the invoice. So invoicing, the last date of issuing invoice, you can just remember the time of supply concept and answer the question based on the time of supply provision itself. You need not study that separately. Now we come to e-invoice. E-invoice is required when the aggregate turnover in any of the previous year exceeds 5 crores. You need to remember only the last and relevant threshold, which is 5 crores. If the aggregate turnover in any of the previous years, so when you are checking whether a registered person is required to generate e-invoice, you will have to check the threshold limit based on the turnover in any of the previous year, not just the previous year. Any of the previous years starting from 2017, if in any of the previous years the turnover, the aggregate turnover has crossed 5 crores, then they have to start generating e-invoices for all their outward supplies. Okay, so the turnover limit is 5 crores. E-invoice is required for B2B supply, for credit notes, B2B credit notes, for exports. E-invoice is not applicable. You need not generate e-invoice for B2C supplies, exempt supplies, advance vouchers, refund voucher, payment voucher. So e-invoice is required only for B2B invoices, B2B credit notes and export. Okay, e-invoice exceptions. Certain category of businesses are not required to generate e-invoice, irrespective of the threshold limit. Insurance, banking, NBFCs, GTA, registered person supplying passenger transport services, a registered person providing admission to cinematographic films, so multiplexes, SEZ units, government department. Okay, so insurance, banking, GTA, which involves transport of goods, then transport of passenger transportation, goods transportation, insurance, multiplex, SEZ units, government departments. They are exempted from generating e-invoices irrespective of the turnover. So you need to remember 5 crores in any of the preceding years to be generated on B2B invoices and B2B credit notes and exports. Exceptions are insurance, banking, transport, passenger or goods transport, then multiplex, SEZ units and government departments. Now, that is with respect to e-invoicing. You need to remember only that much with respect to e-invoicing. That a registered person other than cinema hall, okay, a registered person other than cinema hall can issue a consolidated invoice at any day for all supplies made to unregistered person. Recipient does not want an invoice and the value of supply is less than 200 rupees. So, if you take a grocery shop, I'll give the example of grocery shop where there will be many unregistered people purchasing goods. Okay, and each invoice will be around 50 rupees, 80 rupees, 100 rupees. Okay, so up till 200 rupees. If a supply is made by the shop for about 200 rupees to unregistered persons, and they also don't ask for an invoice, then he need not generate invoices for each supply 50 rupees, 20 rupees, 30, 40. He need not generate invoices for each supply made to an unregistered person. What he can do is he can make a consolidated invoice at the end of day for all these supplies which is less than 200. So if he has made 10 supplies for 100 rupees, he need not generate 10 invoices. Rather, he can generate one invoice for 10 into 100,000 rupees at the end of the day. Now, when is it possible? When it is a supply made to an unregistered person and the recipient does not want such an invoice. The value of supply is less than 200. Three conditions: value of supply less than 200, made to an unregistered person, and the recipient does not want such invoice. In that case, he need not issue an invoice for each supply, rather he can issue a consolidated invoice. Okay, this point you can remember because we have one question in the workbook for this particular clause. So I think this is important from this current attempts exam point of view. Invoice shall be prepared in triplicate for goods and it will be prepared in duplicate for services. Okay. Then we have other than invoice, what are the different kind of documents that we will have? We will have bill of supply. In case of exempt goods, in case of composition supplies, in case of supplies less than 200, where invoice is not being issued, we can issue a bill of supply. Receipt vouchers should be issued when payment is received. Refund vouchers will be issued when the refund is being made. Then another important document after invoice, the next important document is our credit note. Credit note is issued with respect to a certain invoice. Like if the invoice is for 100 rupees and there is some kind of returns in that product, then we will issue a credit note to reduce the invoice value. Okay, so a credit note is generally issued when there is a return of goods, when the product is found deficient, so or in order to make any corrections, etc. Credit note can be issued within 30th November of the following financial year or the date of filing the annual return, whichever is earlier. Okay, so the time limit for issuing a credit note is 30th November of the next financial year. It is in line with our ITC provisions. The due date of availing ITC is 30th November of the following financial year. So the due date of the credit note is also 30th November of the following financial year or the date of filing annual return, whichever is earlier. Okay. So that's all with respect to invoicing provisions. Now, next we will come to e-way bill. E-way bill is also not a very important question. I have not seen a question, even a theory question or a case study on e-way bill, but you can get MCQs. So, e-way bill, when it has to be generated? E-way bill has to be generated when the consignment movement is more than 50,000. Okay. So when the movement of goods and service, the movement of goods is more than 50,000, then e-waybill has to be generated. Okay, e-waybill has two components, Part A and Part B. Part A will have the supply details. What are the goods? What type of goods are being moved, and what is the HSN number? What is the name and address of the supplier? What is the name and address of the recipient? So it will have the basic details about the goods and supplier and recipient. Part B will have the transport details, the vehicle in which it is being transported, the transportation number. So these transport related details will be there in Part B. So every registered person who causes a movement of goods, consignment value exceeding greater than 50,000. Okay, it can be in relation to a supply, it can be in furtherance of business, it can be due to an inward supply from an unregistered person. When there is a movement, the clause for e-way bill generation is movement of goods. It does not matter whether it is for personal use or whether it is for business use. For what is the reason for the movement? When there is a movement and the movement value is greater than 50,000, we will have to generate e-way bill. And when we consider 50,000, the consignment value, the term used is consignment value. Consignment value meaning the invoice value, which includes your GST also. So if my taxable value is 40,000 plus I have a GST of 10,000, the value goes to 50,000. I have to raise e-way bill. So it is for consignment value, which includes taxes. Consignment value means invoice value including taxes. Okay, there are certain mandatory provisions where e-way bill is to be mandatorily made even though the supply or the movement is less than 50,000. In case of handcraft goods, compulsorily e-way bill has to be generated for every movement. Even if there is a 1 rupee movement, we need to generate e-way bill. In case of principal and agent, in case of movement to job worker, e-way bill is compulsory. Now, why it is compulsory for these cases? Because handcraft goods, we have seen that interstate supply, they have an exemption up to 20 lakhs. They need not register when they are moving handcraft goods up to 20 lakhs. So how will government have a control? So in order to ensure there is control for handcraft goods, because they have an exemption from compulsory registration, they are required to file e-way bill even though the consignment value is less than 50,000. Okay, the same applies to principal and job worker also. Okay, 50,000 will include taxable value plus taxes, that is your consignment value. So requirement for filing e-way bill 1, we will summarize the e-way bill provisions. So if the value of the consignment exceeds 50,000, e-way bill Part A can be filled by the consigner, consignee or transporter. Part B is to be filled by the transporter. So if the value exceeds 50,000, Part A and Part B of e-way bill 1 has to be filled. E-way bill will be required even though the consignment value is less than 50,000 with respect to job work and handcraft goods. E-way bill is not required even though the value exceeds 50,000 with respect to exempt goods. For exempted goods, they are exempted from registration, they are exempted from e-way bill provisions also. They are outside the purview of GST. So we need not have a control over the movement under GST. So e-way bill will not be required even though the threshold limit crosses 50,000 with respect to exempt goods. E-way bill is required even though the turnover does not cross 50,000 for job work and handcraft goods. In other cases, if it crosses 50,000, e-way bill has to be generated. 50,000 is consignment value, which is including taxes. Then there is one more condition when the movement is within 50 kilometers. Okay, when there is a intrastate movement within 50 kilometers. So the movement between place A and place B, the distance is less than 50 kilometers, then you need to fill only part A of e-way bill. E-way bill is required. You cannot say if there is a movement and the value it crosses 50,000, e-way bill is required. E-way bill has two parts, part A and part B. Up till 50 kilometers, part A alone, filing of part A alone is satisfactory. Okay. Only if it goes beyond 50 kilometers, you need to fill both part A and part B. So part B of e-way bill is not required to be filled for an intrastate movement less than 50 kilometers. So here the point to note is intrastate. If it is interstate movement, even if it is 1 kilometer, 2 kilometer, if the value of consignment is greater than 50,000, you have to generate e-way bill. But if it is an intrastate movement, then up till 50 kilometers, you need to generate only part A, part B details are not required. Okay. E-way bill, once generated, it cannot be deleted. We can cancel the e-way bill within 24 hours. We can cancel the e-way bill. Okay, these are the most important things that you need to remember with respect to e-way bill. E-way bill, you have to remember the threshold limit, which is for interstate supply, the threshold limit is 50,000. Intrastate, each state will have their own limits. Okay, what is the limit for generating e-way bill? Each state act will have its own limit. So we will study only the interstate as per CGST. Interstate supply, the limit is 50,000. If the consignment value goes beyond 50,000, you have to generate e-way bill. Okay. If it goes beyond 50,000 also, you need not generate e-way bill with respect to exempt goods. If it is less than 50,000, still you have to generate e-way bill for job work and handcraft. For intrastate supply, for intrastate movement, within the state movement of goods, and if the movement is less than 50 kilometers, you need to generate only part A, you need not fill part B. Okay, so these are the important pointers with respect to e-way bill. So we have finished e-way bill, e-invoicing. We have seen the important pointers with respect to these two concepts. Now coming to returns. Okay, so returns, you have to know what are the different type of returns and what is the due dates. That is the important part with respect to returns. Okay, so the first one, GSTR 3B. 3B is a monthly return that is filed for payment of taxes. GSTR 3B is a monthly return. It is for payment of taxes. It has to be filed for, in case of QRMP taxpayers, it has to be filed by 20th of next month. And for up to 5 crore aggregate turnover, in certain states it is 22nd, in certain states it's 24th. So the general rate is 20th. And then there are certain two different dates, 22nd and 24th for certain category of states. It is applicable to all registered persons. GSTR 3B is applicable to all registered persons other than casual taxable persons, non-resident taxable persons, input service distributors, composition scheme, TDS and TCS, because all these people have separate returns to be filed. So for a normal taxpayer, they have to file GSTR 3B by 20th, 22nd or 24th of the next month respectively. And it is in GSTR 3B that you make payment of taxes. You declare that this is my turnover, this is the input tax credit that I want to adjust against the outward tax liability, and this is the amount of cash that I will be paying towards my outward tax liability. This declaration is done in GSTR 3B. GSTR 1 is statement of outward supplies. So all the outward supplies that is made during the month is declared in GSTR 1 by the 11th of next month and by 13th of next month, as the case may be. For registered persons who are not under QRMP, it is 11th. For those who are under QRMP scheme, it is 13th of next month. Okay, the due date, it will be better if you remember But there are many dates, so you just remember for GSTR 1 and GSTR 3B, that alone will be sufficient because these are the most important returns in GST. Okay, so GSTR 1 is your outward supply return. GSTR 3B is your tax payment. Okay, GSTR 4 is for composition taxpayers. So composition taxpayers have two returns. One is CMP 08 and one is GSTR 4. Okay, CMP 08 has to be filed every quarter, 18th of the month succeeding the quarter. GSTR 4 has to be filed by 30th April following the financial year. So CMP 08 is for payment of tax. It is the GSTR 3B of composition dealers. CMP 08, 18th of the month succeeding the quarter, because composition dealers pay tax on a quarterly basis. So for the quarter, 18th of the next month succeeding the quarter, CMP 08 has to be filed for payment of tax. GSTR 4 is an annual return. It's more like an annual return being filed by 30th June of the following financial year. Non-resident taxpayers, for them GSTR 5 is applicable. Then we have TDS and TCS. TDS and TCS is GSTR 7 and 8 for TDS and TCS, and has to be filed by 10th of next month. Final return, GSTR annual returns are GSTR 9C, which has to be filed by 31st December. Now these are important. 31st December, TDS, TCS to be filed by 10th of next month. So please note the due dates for GSTR 1, GSTR 3B, GSTR 9, then GSTR 7/8, which is 10th of next month. Okay, and GSTR 10. GSTR 10 is an annual return. When you are cancelling the registration, you have to file an annual return, which has to be filed within 3 months from the date of order of a date of cancellation or date of order of cancellation, whichever is later. Okay, so 3 months from the date of cancellation, we need to file GSTR 10, which is an annual return that is filed for closure of the business to state what is the stock that is lying unsold, capital goods which are lying in the company, and accordingly we need to make certain reversals for the credit that was taken on the stock that is lying in the company as on the date of cancellation. Okay, so we'll not go deep into these returns. If you just remember GSTR 1, 3B, 9, 7, 8 and GSTR 10. For these returns, please note down the due dates also, because they are quite important. Okay, then we will see one important scheme under GST, which is QRMP scheme, quarterly return monthly payment, QRMP. We will also see what was the question that was there in one of the previous attempts. They were asked what are the components of GSTR 1. So So components of GSTR 1, it is outward supply, right? It is a statement of outward supply in which we need to declare all the outward supplies. We need to declare taxable supply, what is the exempt supply, what is the turnover of exports, what is the turnover of supply to SEZs. All these details will have to be given in GSTR 1. So along with these details, so GSTR 1, we will furnish details of outward supply. What are the outward supplies for which we will furnish the details in GSTR 1? Taxable supply, exempt supply, exports, SEZs, all these details will be mentioned. For taxable supply, we will mention turnover and GST. For exempt, we will mention just the turnover. For exports also, we will mention just the turnover. For SEZs also, we will mention just the turnover, because they are all zero rated or exempt supplies. And we have to give the document details. Document details meaning what are the invoice numbers, credit note numbers that were issued during the current month. Okay, so GSTR 1, we will have details of outward supply. Outward supply is taxable supply, exempt supply, export, SEZ. Then document details. Document details meaning the credit notes that we have issued during the month. What are the number of invoices that were issued during the month? Then HSN details. HSN details is each of the product and service that is being sold. We will have a separate code. HSN, that is a harmonized system of nomenclature. There is a separate number for each product, for each service under GST. So we'll have to mention the number, and then against the number we have to mention what is the taxable value and what is the GST amount. So all these details are the basic components of GSTR 1. So if you are asked a question on what are the components of GSTR1, you have to tell that it is a statement of outward supply, and we will mention all different type of supplies that uh, the registered person is provided during the previous month, and what are the invoice numbers, what are the credit note numbers, what is the receipt voucher, advance vouchers, all these vouchers that were issued during the month. We have to mention the starting number, ending number, and the total number of invoices issued during the month. We should also mention the HSN details, and the turnover, the total turnover of the entity. This total turnover should be divided based on the HSN number for each. So if the business, if the registered person is having three businesses or three products, I would say three products. Okay, product A, product B, product C. So product wise also he has to declare the turnover, which is called as HSN. Under HSN, so he has to mention the HSN of product A, product B, product C. The tax about is the total turnover for product A, what is the turnover for product B, what is the turnover of product C, and corresponding taxes. So that will be the total. So the total turnover is mentioned under two ways. One is based on the HSN number, and one is based on taxable supply, exempt supply, exports, and SEZs. So two type of categorization should be declared in GSTR 1. So there will be separate tables in GSTR1 for each of this data, and all the tables should be filled in. So there will be a table for taxable supply, there will be a table for export, there will be a table for exempt supply, there will be a table for HSN to declare the supplies based on the HSN numbers. So once we fill in all the tables, the required detail will get generated in GSTR1. Okay. So next is QRMP scheme. QRMP, I'll just summarize on QRMP scheme. It is quarterly return, monthly payment. Is my screen visible?
Yes.
Yeah. So quarterly return, monthly payment. This is applicable for tax registered persons with a threshold limit of 5 crores. The aggregate turnover being less than 5 crores, they can opt for QRMP scheme. So under QRMP scheme, we have quarterly returns. They need not file returns on a monthly basis. They need not file GSTR 1 and 3B on a monthly basis. Rather, they can file on a quarterly basis, but they have to make a monthly payment of tax. Monthly payment should be made. So the monthly tax should be paid, but returns can be filed on a quarterly basis. But what happens to people who are getting the supplies from these QRMP taxpayers? Then if the return can be filed on a quarterly basis, then they will also have to wait for the return to be filed for them to take ITC, because ITC provision says that the amount should be reflected in your GSTR 2B. GSTR 2B, the particular purchase will get reflected in 2B only if the supplier files in GSTR 1. So in order to avoid that, they have something called as the IFF facility, which is invoice furnishing facility. Invoice furnishing facility. So on a monthly basis, they can use IFF and furnish the invoice details. So as soon as they furnish the invoice details, it will get reflected in the 2B of the recipient, and the recipient can take credit. but they need not file returns. GSTR1, the entire declaration that I told you, like what is the taxable supply, exempt supply, HSN numbers, all this they need not do. That need to be done only on a quarterly basis. So return can be filed on a quarterly basis. On a monthly basis, we need to file IFF and make a monthly payment of tax. Monthly payment of tax can be made based on self-assessment. You can assess what is the sales that you have made and approximately pay a tax, or 33 percentage. It is called as 33 percentage challan or an auto-generated challan. So either an auto-generated challan or self-assessment. Okay, GST portal itself will auto-generate a challan based on the previous month's turnover. They will take 33% of the previous month's turnover and accordingly calculate the tax payable. So either you can make payment based on the auto-generated challan, or if we have the details and we can self-assess what is the turnover for the current month, and accordingly we can make a payment self-assess on the basis of self-assessment. But monthly payment has to be done and quarterly returns can be filed. And to enable the recipients to get the benefit of GSTR, get the benefit of ITC in the month itself, IFF is filed. That is invoice furnishing facility. We can furnish the details of the invoice so that the recipients also get the credit on time. This is the summary of QRMP scheme: quarterly return, monthly payment. Monthly paid tax, file return on a quarterly basis. This is to enable ease of doing business, so the turnover limit is also lesser. And if your aggregate turnover is within the threshold limit, you can apply for QRMP scheme, and then you can you can pay the taxes under QRMP scheme. They also have a extended timeline for filing your returns. That is, it is 13th of the following month. For general taxpayers, it is 11th. But in case of QRMP, it is 13th. Even GSTR1, it is 13th of the following quarter. Whereas for general taxpayers, GSTR1 due date is 11th. Okay. This is the main thing with respect to returns. You should know what is the due dates, what does different returns stand for, what is the purpose of different returns, and what are the due dates of filing, and QRMP scheme. Okay, this is what you should know with respect to returns from exam point of view. Okay, so there was one question in the workbook that I wanted you to try. So let me just share the screen. 2. XYZ is a trader dealing in sports items. It is registered under GST and has taken the following sales during the day. Supply to a trader registered under GST 175. Supply to an unregistered trader 330. Supply to a retail customer 370. Supply to Mr. B 150. Supply to a student 168. None of the recipient required a tax invoice. Determine which of the supplies you can issue a consolidated invoice. So issue consolidated invoice, the amount should be, the supply value should be limited to 200 rupees. It should be made to an unregistered person and the person should not require for a tax invoice. So here, the supply to a trader registered under GST. So even though the value is less than 175, the person is registered. So we have to issue an invoice. We cannot issue a consolidated invoice. We have to issue a specific invoice. Then supply to an unregistered dealer, value is 300, 330. So it is greater than 200. So you will have to issue separate invoice. Supply to a retail customer 370. Again, we have to issue a separate invoice because the value is greater than 200. Supply to Mr. B, a consumer, 150 rupees. So it covers the conditions. It is less than 200, unregistered, okay, and the recipient, none of the recipient require an invoice. So the recipient does not require an invoice, does not insist for an invoice. The three conditions are satisfied in the fourth case. So you can issue a consolidated invoice. So at the end of the day, we can make a consolidated invoice for the supply. Supply to a student 168. Again, student unregistered person, they have not required for an invoice. The value is less than 200. So you can issue a consolidated invoice. Okay, clear? So I think with this we have completed the GST revision. I want you to go through the workbook. I want you to go through the your study material and ensure that you do all the sums in your study material at least twice before the exam. Okay, that will help you to be thorough with the provisions. So in the next class, we will complete customs. We'll go for the revision of customs. Okay.